KC International slumps nearly 6% as Power Grid bars the company from its projects for 9 months, citing contractual transgressions.
Well, the Income Tax Department visits offices and units of Waaree Energies. The stock slumps close to around 4%, even as the company says that they're extending full cooperation to the authorities.
JP Morgan raises its target price on Hero Moto to 68.50 rupees a share with an overweight rating. The brokerage expects market share stabilization, GST cuts and improving EV market share to boost the stock.
Azad Engineering signs an agreement with Pratt & Whitney Canada to develop and manufacture aircraft engine components. The stock rallies close to 2%.
Automotive component supplier Tenneco Clean Air makes a stellar debut, listing with gains of over 25%. The management will join us shortly to discuss the company's post-listing strategy.
Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And 10:30 a.m. today, markets turned into the green. The global market's in a bit of a tizzy, but our markets are standing out. In just a bit from here, my director is going to be pulling up the rates for you. And as you can see, the market's at the high point of the day. Can India outperform from here on after underperforming for majority of 2025? Well, I'm optimistic. Let's see how that goes. But the Nifty bank, the batsman that's been in top form, top of your screen, that's yet to find its footing today. Maybe trying to see the ball get into a groove and then play a bigger innings.
A couple of points, Nigel, something that really stands out. The first part is that when India's underperformance happened, it was largely because of our lack of any options in investing in artificial intelligence. So the AI bubble, as people called it, kept moving higher, and India did not participate in that. And now if that's unraveling, then India obviously does not lose from that as well. So we didn't party as much, and we are not participating in the hangover as much as well. The interesting part is the IT index. If the AI thing unravels overnight or in the global markets, etc., then we see Indian IT stocks benefit because they were underperforming because of the impact of artificial intelligence as well. And that's reflecting in our markets today. The IT index up around 2.5%. But let's get you some ideas for profit coming in from our colleagues at Money Control Pro. Anubhav Sahu joins in with a stock. Anubhav.
Well, we remain constructive for the CRDMO industry as the drug discovery and development requires huge cost and time. It is pertinent to have cost-effective CRDMO partners. In addition, the US Biosecure Act remains key monitorable as it would facilitate the US biotech industry to significantly reduce their reliance on China. Now, as the India's market share in the global CRDMO industry is just about 3.5% in value, there is great headroom for growth in our view. To capitalize that, prominent players are investing behind capacities and capabilities. So our top pick in the sector is SciLife, which is extending its expertise for peptides, antibody drug conjugates and oligonucleotides. Now it is interesting as these are also the fastest growing areas for the industry. In addition, we have upgraded our recommendation for Syngene as the stock has significantly underperformed. That said, our company's gross block is up by about 50% since fiscal 21. And some of these facilities should start contributing to the bottom line in near term. Lastly, we have downgraded our view for DV Slab, though it is a promising play on GLP-1 value chain. Our valuation is rich and there is likely to be an impact on its API supplies for heart failure drug Intrastor due to generic launches in time to come.
Right, as we speak, all the IT stocks doing extremely well. Eternal is the other one, which is among the top Nifty gainers today. But the stellar listing of today has been Tenneco Clean Air. Arvind Chandrasekaran, who's the whole-time director and CEO, joins us after what is a strong debut on D Street. Arvind, thanks a lot for joining in. You joined us here when the IPO opened in the studio. You said we're looking dapper. Well, who's looking dapper? Your shareholders right now, after a clean gain that they've made on the listing itself. But, what we asked you the last time is what we're going to press you on right now as well. Growth prospects going forward. Do you think this, 10 to 12% sort of revenue CAGR for you is sustainable from here on, given your capacity? And at the same time, if you could give us a sense on how much better can margins get from here?
Look, first of all, thank you so much for having me. We're extremely humbled by the amazing confidence and trust that investors have shown towards our company. Again, it's a testament to our employees, our customers, and from that standpoint, we're very, very grateful to our investor base. You saw from the pre-anchor and also the anchor and just the kind of institutions that have invested in us. It's almost like I couldn't ask for a better dream team, right? The who's who of the institutions have invested in us. So we're very, very grateful. As far as growth prospects are concerned, I think what I would say is that we have very strong tailwinds. So one is we are sitting on the India Inc. story, right? So already 4 to 6% of growth we're going to see simply because of India's growth and the market growth rate. But beyond that, we have 3 strong tailwinds. One is content per vehicle growth from legislation, emissions legislation, and premiumization of shock absorbers. So from a clean air powertrain business, the legislation will help us, whether it's BS6 going to BS7, CAFE norms coming in, TREM 4 going to TREM 5, or on the premiumization side, because SUVs are getting premiumized very rapidly, and so the move from static to dynamic suspension is also happening very rapidly. So we expect to get a nice boost from growth from just pure content per vehicle increase. Then exports. Look, right now, today, we're only 5% of exports in terms of product exports. We think that we can grow that very significantly, both from Tenneco India to the third-party OEMs, but also Tenneco India to Tenneco Global. There are tailwinds within the export area, which we're very excited about. The fact that technology is now equalized. Whatever we sell to local Indian OEMs is what we're also exporting. Plus, a lot of the Western OEMs are pushing for more localization or for India to be used as an export base. This is also driving our growth. And the third tailwind is all of this, what I would call cross-selling, bundling. This bundling and cross-selling is giving us access to white space that we did not have before. We had 5 entities that we merged together, and that's giving us additional tailwinds from a growth standpoint.
So 10 to 12% is sustainable, right? More than that?
Well, I won't specify a number, but yes, I think we're going to be in very good shape because of just the natural tailwinds that are helping our business. We are also excited because there's a lot of new technology that we have that is unique to us. And don't forget, I said that earlier when we met the last time. We're very asset light. We're very capitally efficient, if I can use that word. I mean, 57% ROCE. We have a very unique product and process design methodology that allows us to have standardized and modular parts, and therefore that is a very good example of how we can reuse a lot of assets and also use the same standard parts again and again in different configurations to satisfy all our different vehicle segments, for example.
All right. Hi, Arvind. Good morning. Good to see you, Ben, and congratulations. It's been great interacting with you. Prior to the IPO, when the IPO opened up. And best wishes to you, the team, and the family as well. I believe Dad watches our show quite often as well. So regards to them at home as well. And hopefully we interact a lot more. Couple of points then, in terms of what you said.
Thank you so much, Nigel. Yeah.
One is in terms of the realization. As you move from BS6 upwards, the realizations could improve. When it moved from BS4 to BS6, what was the realization increase? If you could help us out here roughly on that parameter, point number 1. Point number 2, you want to quantify from 5% exports, what can it go to? Double digits?
Yeah, so very good question. So just look at BS4 to BS6, right? When it was BS4, we had dozens of competitors, right? In BS6, who do we have, right? We have just a handful, just 1 or 2 competitors. And that's because of our unique technology. The fact that we offer technology that's affordable, that is faster time to market, that has lower weight, because weight reduction is also very important for our OEMs. So that would give you an idea of, when technology or complexity or legislation is involved, we think that we have a unique value proposition. Our content increase, which was your question, has gone anywhere from 2x to even 4x from BS4 to BS6. Because remember, you went from actually nothing, just a pipe, to having a diesel oxycat, particulate filter, in some cases even an SCR system. So imagine adding 3 boxes to what was before just an empty pipe, right? So that journey will keep helping us as emissions legislations get more and more stringent. So that's really an advantage for us. Sorry, what was your second question?
Yeah, with regard to exports, from 5%, what will be the target contribution?
Yeah, so look, exports is going to grow way, way, way faster, simply because we're starting from a lower base. And because the tailwinds within exports are so favorable to us right now, we think that we're going to be, again, I cannot give you the exact numbers, but very, very fast growth in exports. But again, because we have long sales cycles, I would just like our investors to be a little bit patient with us, because we have, if I start the new technology now, by the time it gets into production, it takes 1.5 years, 2 years, and then it has to ramp up slowly. So we are a long-term player, and you'll notice that. I think with all our products, you have to kind of be with us, and you'll see the growth over.
Would it be fair to assume that exports grow at 2x the average growth rate of the company?
I couldn't give you the exact number, but yes, it will grow way, way faster.
Got that. Just a couple of questions.
Let's say organic domestic growth.
Got that. Just a couple of questions before we let you go. Just your thoughts on the premiumization of the shock absorber business right now. Because of the SUVization of the nation, so to say, how much would you sell a shock absorber for earlier? How has that grown? And what are the further tailwinds here on? And the second related question to that would be, how would then your margins look? Because your realizations are increasing because of the change in legislature for one part of the business. The other part of the business will see increased premiumization. Both of them ideally should be margin accretive, right? So how many basis points is the headroom for margin accretion here? And what's the kind of premiumization push that we can see in your shock absorbers business?
Great question. So look, the last 5 years, right, 20 to 25, saw the SUVization of the Indian market, if I can use that term. Indian consumers went from buying cars to buying SUVs, to the point where now, 55% and upwards is all SUVs, so every other vehicle is now an SUV. But what didn't happen in the past was the premiumization of the SUV itself didn't happen. So although we got a lot of shock absorber content per vehicle simply because we went from cars to larger vehicles, that automatically required, let's say a bigger form factor for shock absorbers. But now what is exciting is that we are noticing that the end consumers and OEMs now want ride quality to be one of their key differentiators, right? And you can see that across all the Indian OEMs. So 95+% of the Indian market is conventional shock absorbers. Now we see, in fact, I would say even higher than 95%. But now what's happening is the market's moving very aggressively towards like frequency-dependent damping, and I would say even more like, let's call it semi-active suspension to even active suspension. So I think that journey is helping our content to go from X to anywhere from 3X to 4X, and in some cases even 6X, depending on the kind of technologies being used. There's a lot of electronic controls coming our way. You need BLDC motors, you need accumulators, you need lots of sensors. So the paraphernalia around the shock absorber is sort of growing.
All right. Very quickly, Arvind, before we let you go, Tenneco Clean, well, that's largely into post-combustion emissions control and some other engine parts as well. What would the company's role be to an OEM when the migration to EVs gains momentum?
So, look, so you understand that, right? So 50% of our business is shock absorbers. So shock absorbers, right technology, suspension. So it's totally agnostic to the kind of powertrain we use, right? That's 50%. The other 50% is clean air and powertrain. And even there, we've been lucky that we've avoided certain segments that will go electric faster. So we are totally not present in the two-wheeler business. We're not present in the three-wheeler rickshaw business. Even on the passenger vehicle side, we are mostly in the higher displacement engines that will be kind of slower to electrify. But we're not so worried because between commercial trucks, off-highway, industrial, and even stationary gensets, our content is so high, we find that our actual exposure to electrification multiplied by the penetration rate of electric vehicles in India is like 0.5% today. And even that is not going to change much in the next 5 years because we have enough content per vehicle, we have enough exports, and we have enough tailwinds that will take us there. And just one last point. On the shock absorber side, remember that when you go from an ICE vehicle to an electric vehicle, automatically that electric vehicle requires a more robust shock absorber simply because electric vehicles are denser, heavier, the center of gravity is different. So by default, the content per vehicle goes up significantly.
Well explained.
And margins go to what, 21, 22% in the next couple of years? Or better.
Give you numbers.
Okay.
But all I'll tell you, guys, is that, look, obviously, when you have new technology and there's fewer competitors, we're hoping that these will come with higher margins.
All right, Arvind, it's been a pleasure talking to you. Wish you all the best. Celebrate the day. I think your global's head as well was down, ringing the bell at the exchange. So have a blast. And this is one of the few IPOs that appeared relatively expensive, but still the street believes that, in fact, it still has way to go. So thanks a lot for joining in. Lovely visuals there up for you on the screen. Well, time to slip into a break. Chandan Taparia from Motilal Oswal Financial Services is waiting for us with a trading call. Welcome back. Well, the market's holding into the green. We have Chandan Taparia who joins us to help us out with his call. Chandan, what do you think? All-time highs in the offing? Would you be looking to buy on dips?
Yeah, good morning, Manglam and Nigel. Thanks for having me. So Nifty has been flirting near psychological 26,000 marks from last 5 to 6 weeks. The concern is that follow-up is missing at higher levels, but the good part is the index is absorbing all the supply near 26,000 levels. We believe that major trend is positive and buy on decline could continue until Nifty holds above 25,750. We are expecting index to hit the all-time high towards 26,277. So buy on decline could continue here. And when we talk about the bank Nifty, that has been outperforming the broader market. However, in last 2 trading sessions, it witnessed some consolidative move, but major trend is intact and selective stocks are doing well, whether we talk about the PSU name or the private bank. So till bank Nifty holds above immediate support near 58,000, we are expecting next leg of rally, which can even take it towards 59,250 to 59,500 in the banking index.
All right. What about the IT index and individual stocks, Chandan? What do you have for us on the list today?
Yeah, so quite positive on the Nifty IT index. In fact, index has given a consolidation breakout on daily and the weekly chart. And if I look at the study of the relative rotation graph, this sector is entering from improving to leading quadrant, which clearly indicates that strength and momentum both are visible in the entire sector. And that's why we have preferred sector and stock in IT segment, which is buy on persistent system. One of the strongest name which has given a consolidation breakout of last 5 trading session. In fact, it has been making high tops, high bottom on the weekly chart. And the entire sector and most of the IT counters are doing well. In fact, the buildup of long position in last couple of days clearly indicate momentum could continue. So we are recommending to buy with support of 6120 for an upside target towards 6600 in the counter. Second trading idea, that is buy on Bharat Forge. We have seen a major price pattern in the counter. In fact, it formed a bullish pole and flag pattern on the daily chart, which has positive implication. In fact, high tops, high bottom on the weekly chart indicate bullish stance. In fact, the longs are adding with some call unwinding, indicate bullish stance from current zone as well. So recommending to buy with support of 1390, and this counter has potential to rally towards 1485 to 1500. Last trading idea, that is buy on MCX. However, momentum is slow, but strength is intact. And in fact, we have positive view on the capital market theme. So MCX anytime can see the next leg of rally by rallying towards 4 to 5%. I think 5-digit mark is likely to be soon. So one can buy with support of 9600, and this counter from capital market theme could head towards 10,000 to 10,200 levels.
All right, take that point, Chandan. Thank you so much for joining in. With that, we take another short break, come back, get you more on the markets and a lot of stock-specific action. Stay with us. Welcome back. You're watching us here on Chartbusters. The Nifty Bank mildly under pressure. No real worries out there because it hit a fresh record high yesterday, day before, and has been continuously doing well. But no problem for the Nifty. Closing in on that 26,000 mark once again. It's been powered by the IT pack, the mid-caps as well, mildly in the green. With that, we leave you on this edition of Chartbusters. You stay tuned. Trading Hour comes up next.